Hey everyone, it's Stan Heller here. Petroleum stocks have been a safe haven for many investors as they have continued to rise even as the market has corrected from its November highs. The question people are asking now, should I continue to hold my energy stocks and is it okay to buy? As always, we turn to VectorVest for the answers. And it's important to understand that VectorVest analyzes sectors and industries the same way it would analyze an individual stock. And you can see on this slide, the indicators look very similar, and they are similar. They're the same as what we have for our stock analysis. To determine the values, we simply average the price and the other data points from the individual stocks within the sector or industry group. And when we do the analysis of sectors and industries, this is the industry viewer that I'm showing you, the relative timing indicator is the most important. It gives us the trend direction and the magnitude of the trend of the industries in this case. And you can see petroleum is still very much at the top of the list. We have an RT ranking, which shows us numerically the order or how the industry compares to the other industries in the database. So they're numbered from 1 to 122 industries in Canada and about 220 in the US market. So let's go in and have a look. These are the high flyers, but let's go in and have a look. And we'll start with Canada and then move to the US market. So here is the Canadian home page and another kind of a volatile market again today, but the TSX flirting with a bullish session on the day. We just go quickly to the Viewers tab. And from the stock viewer, we can click on the sector viewer as our starting point. So from here, we can see that petroleum is the second ranked sector of our 39 sectors based on the relative timing score. So 1.32 on that 0 to 2 scale, we know that the petroleum sector has been in a strong uptrend. If I right click on it, I can view the sector graph. Pull that up here. And this is a very simple VectorVest layout with price, the average price of all the stocks in the sector running across the top of the graph, a 40-day moving average, that's our default. Relative timing is in the red in the subgraph. And then there is that RT ranking indicator. Now that may not be on your default graph. This is the default layout. You would just come to add parameter, capital appreciation, and left click on RT ranking, and then just check it. And now it's on our graph. We can right click again and change the style. Might like to see it a bit better. So I can change the color. I'll make it a dark green, and I'll make the thickness the medium, and it stands out very well. So we can see that the petroleum sector stocks really started to ramp up back here in September, and that rally lasted quite a while. A little bit of a pullback here in November, and then we like to see price get back above the 40-day moving average as an entry point. The relative timing has crossed above 1. And the RT ranking indicator is letting us know that petroleum is starting to outperform the other sectors in Canada in this case. And it moved all the way up to number 1, and it's just pulled back to number 2. But on December 31st, we could see that was a great entry opportunity again into the petroleum stocks. And I don't see anything that raises any alarms about the sector at the moment. We're still hitting higher highs and higher lows. So from a risk point of view, the sector still looks quite strong. It's going to be volatile. We can see the red bars sort of interspersed with the overall green bars. So there'll be continuing volatility based on the news, but overall, we're still in an uptrend. So December 31st was a good opportunity to buy into those stocks. Now, if we wanted to see which industries on December 31st were leading the way in petroleum, I can right click on the sector and view the industries in the business sector. Pull it over to this screen, and we can see that currently drilling, U.S. exploration, Canadian integrated, field services, those are the top ranked industries. And you see the industry ranking is here. And we've got 10 industries in this sector, and petroleum is up at the top. So let's just right click and view the industry graph in this case. And I've got the same settings. It's the default layout with RT in the subgraph and the RT ranking. And now we can see that price crossed above the 40-day moving average on about January 5th. So just a little later than the overall sector, but it's really moved up nicely from there. And so we can take the date calendar back to January 5th and see which stocks in the drilling industry were at the top of the RT list at that time. Whoops, I said January 5th, so just select January 5th. And so drilling was a little bit down the list at that time, but I'll right click on it and view the stocks in the industry group on January 5th. And from here, I can do a quick test. I'll just quick test them all, just 7 stocks in that industry group. And there we have our leaders right at the top. CEU right at the top of the list, a 29% gain. Phoenix Energy, 49%. Now, Stampede Drilling is quite a low price stock. We might have taken a pass on that, but Precision Drilling, well-known Canadian petroleum company, and up 80%. And Ensign up 72, and Akita up 76. So some very good performances there. And if I right click on the graphs just to see what they're doing now, CEU is still hitting higher highs and higher lows. Volatility coming into the stock, so a little bit of an issue there. But overall, a very good looking stock. And in terms of when was a good time to buy, well, we got a buy rating from VectorVest on December 24th, and the RT was above 1, so it was in a good position to buy there. And then, of course, the sector crossed above that 40 moving average on January 5th right there, so a good time to come in to that stock. I always like to put on the earnings per share. There it is there. I can right click and make it an area. And so CEU was growing its earnings quite strongly all the way to the right edge. So Phoenix also similarly very strong. I can put on the volume here. We see some strong volume prior to that big move. Now Stampede Drilling, we can see that the price is quite thin, and so the volume is also showing a little bit of weakness there as well, although not too bad on the volume on some days, but it's very very sporadic on the volume. So there's Precision Drilling. Pretty good volume, RT rising, earnings coming up. And Ensign looking very good as well. All right, so that's the Canadian. Again, looking at the energy. If you're holding these positions, you want to make sure you've got a stop loss in place, or at least you know where you're going to exit the position. But for now, there's nothing that says you need to jump out. If I stream it forward, they're mostly buy-rated stocks in this particular industry group, and similarly with the others as well. Now we can also look at the US market very quickly, and kind of a bearish day in the US market. We can see the red coming into the market timing, so not the best time to be buying stocks, but here's the energy XLE, sort of the index, and it's up over 2% again today, having had a down day yesterday, and today's March 10th. So from here, I can go back to the Viewers tab and just come down from the Viewers home and click on the Sector Viewer. And we can see petroleum is currently the #1 ranked sector when sorted by RT descending, that relative timing indicator, very strong here in the US and outperforming the other 40 sectors in the group. If I right click, I can view the industries in the business sector. Pull that over to this screen. So once again, petroleum drilling in the US, as it was in Canada, is the top ranked industry group, and a very strong RT rating of 1.59 on that 0 to 2 scale. So we analyze the industry the same way we do the individual stocks, with all of our various indicators running across the top. And if I right click on the industry graph, let's see when it crossed above the 40 moving average. That was right about here on January 4th. Relative timing crossed above 1. So that would have been a good entry. Let's just have a look at the RT ranking. I just left click on add parameter, click on capital appreciation, and there's the RT ranking. And we can see it was rising. It kind of hit the bottom here around December 20th, was rising from there, and by January 3rd, it had moved up to 108 in the ranking. So that's sort of a mover and shaker. You identify the movers and shakers by RT starting to rise, and that just means that the industry group is moving up faster than the other groups. So let's have a look from January 3rd. Would have been a good entry point for petroleum drilling stocks. View the stocks in the industry group in the US here. And In Play Oil Corp right at the top, and Precision Drilling. So a lot of names that you will recognize here. And I can run that date back to January 3rd. So there it is there, when the industry pulled above the 40-day moving average. Quick test them all from there. And In Play up 46%. Now Denbury would have taken a loss at 7%. And then from there, really strong performances pretty much all the way down the list. Now let's just have a look at these graphs and see what happened to Denbury. Here again, January 3rd was the date that the sector and the industry group started to rise. So there's the January 3rd date right there. And In Play was certainly leading, among the leading stocks at that time. Now Denbury, I think we would have taken a pass on this stock because the 40-day moving average was moving in a downward slope toward 4 o'clock. So even though RT was rising at the time, I think the price action would have told us to stay away at this time. And then this is more the graph setup that we're looking for, with price rising above the 40, RT very strong, earnings per share rising to the right edge, and that's a great entry. So overall, when we look at the stock viewer, we can see that petroleum stocks are still very much leading. So I think it's okay to stay in there as long as your stock isn't falling and triggering your sell price. And on up days where the sector and the industry group that you're looking at and the stock that you're looking at, for making a small purchase, fewer shares, fewer positions, but petroleum would be one of the sectors to look at. Chemical fertilizers has been very strong, steel as well. And there's the US side. Movers and shakers, these are the ones that are starting to move up. We look at the RT delta, and you can see a 10-day RT delta here. So these are some of the industries that are starting to make a move to the upside. All right, so there we are. We think we've answered the question, is it still okay to buy energy stocks? And I want to thank you for watching as I somehow managed to get out of my slides. There we go. And we do have a special on if you want to try VectorVest for 30 days. It's just 99 cents for 30 days. You can just give us a call, 1-888-658-7638. And as always, if you like the content of the video, smash that like button and we'll grow our audience. So thank you very much, everyone, for watching, and wishing you all the best. Yeah.